Hi, my name's Jeremy Takle. I'm the co-founder and CEO of Pennyworth.
Hi, and I'm Ben Harvey. I'm the CPO at Pennyworth.
I've spent the last 20 odd years building banks all over the world, mostly for Barclays and more recently for a number of fintech such as Klarna.
Spent about 18 years in retail consumer finance for Barclaycard and Barclays.
So Ben and I have been building banks all over the Europe and North America over the number of years, including a standalone direct-to-consumer credit card bank, digital propositions. We built the UK's largest digital and most recently in the US digital challenger bank from scratch, so deposits, loans, and cards. But in each of those instances, we were building profitable businesses, sustainably profitable businesses, giving great value as a challenger should do to their customers, but doing so at a scale and with a product set that actually enable us to create a sustainable franchise. Pennyworth is what we like to think of as the UK's first digital bank for the aspiring affluent. So a bank for young professionals and other busy people who we recognize all want to have and get more out of their money. We see banking as pretty much broken, and we want to fix it by bringing it into the 21st century, particularly making it easier for busy people to achieve their financial goals.
Traditional banks, they're continuing to offer these customers quite poor products value-wise. Very low interest rates on savings, for example, an impersonal service. They don't treat these customers differently from all of their other mass customers. And then on the other hand, you have the first wave of neobanks that they've created some great experiences, great digital experiences for all customers, but they've been very busy sort of battling for current account relationships. Trying to win the primary current account for these customers, not necessarily really focusing on their needs to achieve those goals. And that's where I think Pennyworth is different. We're going to be offering really rewarding products across savings, investing, and borrowing. Different to the others as well is that this is going to be done through heavy use of open banking. So we are not going to be offering a current account. We're not going to be expecting customers to switch their current account, which is very, very difficult to do. Customers don't want to switch their current account. So customers will be able to link their current account, and they can see all their finances within Pennyworth, but we'll be able to help them with their bigger financial goals without them having to do that.
We're talking now, it's the week before Christmas 2020. COVID aside, it seems to be what's occupying most people's thoughts right now. How might the outcome of the kind of Brexit negotiations that are currently happening affect your plans, and I think also the prospects for the kind of UK's fintech scene in general?
In terms of our plans, given that we're at least 12 months away from starting to lend into the UK market, we've got some we've got some time to look at what is the impact. And I think that whatever Brexit impact is being overshadowed, at least at the moment, by coronavirus and the impact on the economy there. So both of those factors will have a chance to reflect on as we evolve our scorecards and start lending into the UK market. So that's, I think, for us, it's a slightly longer term impact that we're worried about. I think for the UK fintech market, the ecosystem is still very strong. I mean, it is probably the strongest, if not globally, at least in Europe. And that's a combination of the city, of the large financial services firms that are already here across insurance and banking. It's also the fact that you've got great universities, business schools, and a very large startup community and investors that sit around that as well. So I think that nothing that Brexit is going to do, I think, will prevent that ecosystem from flourishing. In fact, it might come into its own, given the independence from Europe. Difficult to see how that might evolve, but you can see that. And I think that the fact that in the past firms have benefited, particularly banks have benefited from passporting into Europe, obviously that if that's not maintained in a new arrangement, then that's a constraint, obviously. But I think in retail banking, once you get to a certain amount of size, and particularly in consumer, focused businesses, they're actually very much, domestic businesses. I mean, retail banking is not a global business; it's a multi-domestic business, and so often, you're actually faced with very different consumer behaviors, different forms of supervision, and often it's better to actually, ring fence your bank. And there are ring fencing rules in many of these markets as well. That means once you get to a certain size, you actually have to go into a separate legal entity.
We see in the kind of the Far East, the tech giants wanting to get more and more into banking, and I know that in Asia that's perhaps more advanced, but in the West, you can see all of the tech giants wanting to get into payments and stuff like that. How kind of disruptive could that be, and how do you see kind of Pennyworth sitting in a world where you've got the likes of Google and Apple taking on the big banking incumbent?
I think there's definitely two different cases we're looking at. The Asian case, and particularly with the super apps, is one that has really come from the fact that there hasn't been a really strong alternative in some of those markets. So the sort of Chinese Taobaos, etc., are results of the fact the banking industry has been quite weak, and therefore they've been able to wrap up insurance and investments and banking all in one super app and then spread that very, very quickly. And that works well in these developing markets, and as China is now very, very much a developed market, but has large populations with not great alternatives. I think that's different in the West, where there are lots of alternatives, both of neobanks and payment systems and so forth. I think it's right that I can imagine that the big tech companies, the big four, are trying to move into select pockets of those. But I broadly seen them doing that through partnerships, right? Whether that's Apple with Marcus, or others that are just collaborating with the larger banks. They're not really trying to, I think, pursue the regulated banking business.
What are your expectations for the fintech scene in 2021?
We certainly expect more questions to be posed of unprofitable business models. I think trading conditions are going to be difficult. Traditional banks are continuing to reduce their costs. That's going to be difficult for them to break their models. One or two potentially will be bringing their own kind of startup banks to market. It'll be very interesting to see whether they get any success or traction with those. The environment for fintech is still strong. The fundamentals underneath are still strong. So I think there will still be new startups continuing to come to market in 2021. Of course, will be one of them. I think not a development, but I think an acceleration you'll see in 21 is open banking. A lot of lenders bringing open banking to market. COVID has accelerated some of that. So as more consumers experience open banking and get more used to it, I think we'll see an increasing adoption and familiarity of open banking.
What will success look like for you in 2021? What are you hoping to achieve this year?
Well, we're starting off the year super busy on a couple of fronts. One is that we're preparing to launch our beta app. We're doing that in collaboration with our Pennyworth pioneers. And then the other activities, we're still in what's called pre-application with the regulator. And so by the end of this initial quarter, we hope to be finished with our application process that then moves us into what's called authorization in a proper way, which is our ability then to mobilize the bank. And that's really the agenda for the rest of the year, in terms of then starting to build up the bank platform, hire more of the team, particularly the core technology, the core banking balance sheet management. So whether it's exactly at the end of this year that we're ready with that license and ready to launch, we'll see. That's a lot to do with the regulatory process that we have to go through. But our intent is therefore to not only have an early beta app in production, but also more of our user experience and ultimately our banking products ready to go.
Thank you very much.
Thanks very much, James.
Thanks, James.